Bitcoin topped the closely watched $50,000 level for the first time since mid-May in an ongoing recovery in the cryptocurrency market from a disorderly rout just 3 months ago. The revival has excited animal spirits again among the crypto faithful. Others see the speculative asset. Tune in for the most important finance news today by MasterDigest. Stock futures were higher in first day's trading following a volatile week on Wall Street as investors eye a key event where the Federal Reserve could hint at prospects for tapering stimulus. The S&P 500 advanced and reached a fresh all-time intraday high. The Nasdaq Composite outperformed, adding 1.6% to reach record intraday and closing highs. The positive sentiment extended into other risk assets, and oil prices also rebounded following recent declines. Traders are eagerly awaiting the Jackson Hole Symposium for clues on the Fed's timeline for dialing back its $120 billion a month bond buying program. The event takes place virtually on Thursday and Friday. The economic calendar also features a string of economic data, including updates on home sales, durable goods, and personal income and spending. Equity markets could be looking at a choppy week after last week's Fed minutes rattled investors. Earnings will continue with Best Buy, Dell, and HP among the companies reporting, and in the Eurozone PMI data will give some fresh insights into how the economy is performing. Bitcoin topped the closely watched $50,000 level again in an ongoing recovery in the cryptocurrency market from a disorderly rout just 3 months ago. The largest virtual coin advanced as much as 4.2% to almost $50,440 in Asian trading Monday, with other tokens including Ether and Cardano's ADA also rising. Bitcoin was last above $50,000 in mid-May, Bloomberg reminds. Bitcoin hit a record of almost $65,000 in April, driven by a tide of liquidity, fast money bets, and optimism about growing demand from institutional investors. Supportive views from billionaire Elon Musk and the direct listing of digital currency platform Coinbase Global Incorporated also fueled optimism. But more critical opinions later emerged, including an about-face from Musk, focused in part on the environmental cost of the energy consumed by the computers that underpin Bitcoin. A cryptocurrency crackdown in China also soured the mood. Bitcoin tumbled below $30,000 after a crypto rout in May. Outside of the largest coin, second-ranked Ether has also been climbing, boosted by an upgrade to its underlying network that signals a more constrained supply of the token. Bitcoin is up 73% this year, Ether 350% and ADA over 2,000%. The likes of Dogecoin and Solana have also contributed to the crypto rally. Traders this week are poised to focus closely on Federal Reserve policymakers' virtual appearance at the bank's annual Jackson Hole Economic Policy Symposium. The event, which takes place from Thursday to Saturday this week, is set to serve as a forum for more discussions around Fed policymakers' plans to announce and implement a shift in the central bank's monetary policy stance. Namely, investors have been closely watching for months to hear when officials will begin tapering their purchases of Treasury and mortgage securities. This asset purchase program had been a major policy underpinning U.S. equity markets this year, providing liquidity throughout the economic crisis induced by the virus. But as the economy makes headway in recovering, Fed officials' talk around pulling in the reins on this program has started to increase. Global central banks, led by the U.S. Federal Reserve, the European Central Bank, ECB, and the Bank of Japan, BOJ, have collectively spent $834 million an hour, that's $13.9 million per minute, for the past 18 months to keep businesses viable amid the COVID-19-led lockdowns. According to strategists at Bank of America, trillions of dollars, euros, and yen have been created to shore up the global financial system and to provide much-needed liquidity to households and businesses. It is an amount that represents the wall of money that helped companies stay afloat during lockdowns and led to the biggest stock market rally of a generation. The Fed, ECB, and BOJ have pulled out all the stops in their response to the COVID-19-induced global economic slowdown. They have maintained negative or rock-bottom interest rates and aggressively expanded quantitative. Over the past 18 months, central banks had deployed a host of traditional and non-traditional monetary tools to help fight the global meltdown. For instance, the U.S. Federal Reserve System alone has put in $4 trillion. Other central banks responded with unprecedented intensity to the economic crisis by absorbing so much of the bond market to force down the borrowing costs. The Eurozone is easing restrictions and is expected to boost the travel supply chain. Issues are expected to act as a drag on manufacturing activity. At the same time, Germany this week will publish the latest reading of its IFO index, which is expected to ease slightly from a 2.5-year high. On Thursday, the European Central Bank will publish the minutes of its July meeting when it unveiled updated forward guidance on interest rates and implemented a new monetary policy strategy designed to bolster inflation. The minutes will be scrutinized for clues on how future stimulus plans may evolve beyond the current planned end date for the ECB's asset purchase program in March. PayPal is launching its cryptocurrency service in the UK. The US online payments giant said it would let British customers buy, hold, and sell digital currencies, starting this week. It marks the first international expansion of PayPal's crypto product, which first launched in the US in October last year. PayPal's crypto feature lets customers buy or sell Bitcoin, Bitcoin Cash, Ethereum, or Litecoin with as little as £1. Users can also track crypto prices in real time and find educational content on the market. Like the US version of the product, PayPal is relying on Paxos, a New York-regulated digital currency company, to enable crypto buying and selling in the UK. PayPal said it has engaged with relevant UK regulators to launch the service. PayPal's crypto service is similar to one from UK fintech firm Revolut. Dubai's residential property market is on a steady course, with prices expected to rise modestly over the next couple of years, according to a Reuters poll of housing analysts who say property prices there will remain affordable during that time. The economy has bounced back sharply from the pandemic in the city-state following a successful vaccination drive, and that has spilled into the real estate market, with a continued increase in sales, according to Dubai Land Department records. Dubai's house prices were forecast to rise 3.0% this year and 2.5% in 2022. Compared with 1.1% and 2.8% expected 3 months ago, according to a Reuters survey of 11 latest property analysts. That modest outlook stands in stark contrast with other world property markets like Canada, Australia, and New Zealand, where already record-high house prices were expected to rise in double digits this year, stretching the limits of affordability. A regional powerhouse of trade and tourism, the United Arab Emirates economy, a union of 7 emirates including Dubai, is expected to grow 4.2% in 2022, according to a Reuters July poll. The UAE Central Bank pegged it at 3.8%. Thank you very much for watching. If you liked this video, please like and consider subscribing. Also, share this video with your friends if you feel so, and please, put your opinion down in the comments. If you want to know more about the finance, please, check the links below.